Okay, so this session is being recorded, and there are three topics. One of them is a new topic called Beliefs in Trading System. I have prepared 3 slides on this topic. I will explain what it is. It is your belief in your own trading system which you develop, and then the market conditions. So, depending on the market condition and what belief you have in your own trading system, how you react. So you will find yourself when you see that presentation, you should be finding yourself. There are 9 modes. You will be finding yourself in one of those 9 modes. So I will explain later that belief and the market conditions. First, I just want to show you some charts and talk to you about markets, and then we will move forward. Okay, so you can see my all right, so you see, okay. So some slides are basics in the beginning. It's like common slides I cover in every webinar. So if you have heard me talk about before, please excuse me and go and get the water. I say trading is the hardest way to make easy dollar. It is. Trading is the hardest way to make easy dollar, but the dollar comes once you understand the market, then the dollar comes very easily. So every day you wake up, you bring some dollars, but it's a very hard way to do it in the beginning. So in the beginning, it is very hard. It takes about 10,000 to 20,000 hours to master this. There is a big learning curve. You can cut down the learning curve by associating yourself with a mentor, and the mentor will accelerate your learning curve. So instead of 10,000 hours, you will acquire the skills in 7, 8, 9 months, and then you will, as you move forward, you will put on more skills yourself and interact with your mentor. So I do have I developed a 6-month coaching program. Now it has gone to 7, 8 months coaching program. So I call it 7 months now. So if you're interested, let me know. I'll send you the details. Now, in stock trading, you need to know how professionals make money in a stock market, where they come and how they come, and what the charts are telling you that they are coming, or they are already there and you need to get in. So there are certain chart patterns which give you the idea that look like the big boys are coming now. You don't need any indicator. So I don't teach about indicators. I teach you about the core. So once you understand the core, and then you can put some other your favorite indicators or studies, whatever, on top of it. So it's like bullseye. You learn the bullseye. So in my early days when I was learning, I met a mentor named Chief. He is the one who told me that I've been trading for 40 years, and this is my rule. I try to figure it out if the big boys are in the trade or not. If they are, then I am. I don't want to be with the retailers. So this is very important. How professionals make money in the stock market. And he also gave me the advice that also always follow few techniques or few markets. Don't learn around commodity and foreign currency and futures, etc. Because at that one time I asked him, "Hey Chief, should I be learning about commodity or foreign currency? What do you think, Chief?" So Chief said that I don't do this mistake. What I did, I lost a bunch of money by switching from equity to foreign currency to commodity, and then I'm back to equity. So don't do this mistake. So stay in one area, just specialize 200-300 stocks. That's enough for you. You don't need to go look around other stuff. You can have knowledge, but just trade what you're good at. So this is what the advice he gave me about Bruce Lee. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So practice one kick 10,000 times and master the few techniques. That's what also he told me. Master few techniques. So master few chart patterns. There's so many chart patterns, thousands of chart patterns. So you cannot master all. Some are not even reliable. Some give you less return. some occur once in a while, like in a year, in 1 year. So find those patterns which occur often, are reliable, give you good return, and valid for both markets, bullish and bearish. Some patterns are valid for bullish market, some patterns are valid for work good in bearish market. So you need to know both patterns for both kinds of markets. But then there are patterns which are working in both markets, because that's what when that occurs, then it means that the buyers want to go in this market, in this stock. So pay attention to those. This is what some of our clients are saying. There's some testimonials, there are many on websites. I receive every day a lot of testimonials, and um, I don't do anything with it. Anyway, so we have a swing option service. If you're not a member, you can join for 287 quarterly. Published price is 337. I'll send you the offer tomorrow sometime in the inbox. After this webinar, I'm driving to some place here in Thailand where the river meets the sea. So I've been there one time. It was late at night and it was raining, so I couldn't enjoy it. So river meets the sea. It's very beautiful. I'm going there. It's 1.5 hour drive, and then like it's in a deep jungle. Have a lunch and then come back in the evening. So that's what I will do. So after this, so anyway, so you will receive an email tomorrow. Okay. Let me explain briefly there are three strategies I use often, and breakout strategy, breakout reversal strategy, opening range breakout strategy. I've explained this many times. So those who are new, they should just listen to this, listen, and if you have already heard about it, then it's a repetition or maybe a refreshment to your brain. So breakout strategy, when the stock is breaking out. So a lot of stocks, they just consolidate at the top and they just break out. For instance, Momo broke out, Facebook broke out, Nvidia is breaking out, Apple is breaking out. So these are the stocks that are breaking out. So the breakout strategy is good when the stocks are consolidating on the top, and the market is also moving in with force, with good volume, or there's a buying pressure, or something renewed event has occurred. So, like today, employment job, the market was very good. So the stocks were being bought, and the tech stocks are the one which are leading the market. So if you, we all should know which index is the leading index all the time. Out of the three, four indexes we have, four, we should know all the time which index is the leading index right now, which one is the laggard. So Nasdaq has been a leading index for a while now. So the stocks in that index, they should be paid attention to if they are breaking out. So what they do, when the index is the leading index, the stocks in that index, they just don't go down. If they don't move, they just move up and down, consolidation, just moving up and down. They give you fake move to the downside. It's not move to the downside, is actually just profit taking and slow buying. And then when the market starts moving, a news comes where big boys are waiting for that news, they jump in on that those stocks. So Baidu, Baba, Facebook, Apple, Nvidia, all these stocks are breaking out. So these are the stocks you should have in a long-term portfolio. They are going higher. So that's what breakout strategy is. Momo, so name, I will show you some charts. Now, breakout reversal strategy, where the stock moves down and then due to some news, and so the stock comes down. And then they find the news is not as bad as it is, and it starts to move up. So, for example, give you Win. So Win had bad news yesterday. It dropped like 8+ points, and then it went up. Now it's only down like $3. So it's formed a solid hammer. So I'll show you the chart. So win looks like going higher after dropping 8 points. Now opening range breakout. This helps me every day, and I find good trades based on this strategy. Like for instance, I found Intel yesterday. So Intel, and the other day I found Micron long and Micron short. So this is what I do, and I explain to you. You can implement this strategy on your own platform. So there are 8,000 stocks. You cannot watch all 8,000 stocks. So I have narrowed it down to two baskets. One is the 603, 610 stocks. So every good stocks, I put it in that basket. Now then I have a core basket, which contains 300 plus stocks. So that's my core. So if I just want to focus only on core, I just less stocks, I just pay attention to those 300 stocks. That's enough for me, 300 stocks. Out of 300, only 100, 150 are being repeated trading. The others are hardly I trade. So all these big name Apple, Baidu, Baiwan, NVDA, etc. I don't trade Amazon, PCL, and Google. They are very expensive. So other than that, I am trading all these Caterpillar, Home Depot, Lowe's, right? Facebook. So I put those stocks in the basket. Every day there's the same exercise. So in the basket. Now the program is running, and there is one monitor dedicated for opening range breakout strategy. So in what it does in a 5 minute, there are windows: 5 minute, 15, 30, and 1 hour. There are four windows, and behind the windows the baskets are running for those 300 stocks, core stocks, and I have set up the timer: 5 minute, 15, 30, and 1 hour. So after 5 minutes is passed, 5 minutes and 1 second, the stocks which are moving up after 5 minutes and have a good volume, they will show up in that 5 minute window. This way, I remove all the other. Suppose I have 310 stocks, and only 10 stocks show up in this window. I got rid of those 300 stocks because they are not moving after 5 minutes. They went up, initially had a burst, and then they faded. So they are not good for me. I don't care about them. I care the stocks which are moving after 5 minutes. So after 5 minutes, there 10 stocks show up. So I click, and I when I click on the symbol, then another monitor, mm, the chart show up, right? I have built another computer here. When I came to Thailand, I ordered a brand new computer here, and I have bought four monitors set up. So in my home, I have seven screens here. Back home in San Diego, I have 15 monitors. So here I have seven. So I'm fully equipped here too. So in one of the monitor, the chart show up for that stock. So I just remember that, okay, this is stock, this is stock, this stock look good. If there's a stock which I have a position in it and it's doing that thing, then I start monitoring that stock, because I just want to make sure that it doesn't fade after hitting the target and comes down, and then I lose the profit, because that stock become my priority. So I'm watching that stock. I have targets set up. I set my sell order, and I send alert to the member saying this stock needs profit needs to be taken, right? So I do that work. I watch my markets conditions, what's the market going on, what other things are moving, and then after 15 minutes pass, 15 minutes and 1 second, there's another window where the other stock pop up. So these 10 stocks out of 10, the 7 or 8, 2 or 3, they move to that window, which tells me that even after 15 minutes, these are the stocks which are moving up. So at that time, I decide whether it's for me, is it a good idea to take the trade right now, or should I wait for another 30 minutes? Sometimes 15 minutes is enough for me to take the trade, because if I wait beyond 15 minutes, then I realize that if I wait beyond 15 minutes, I will miss the trade. So for instance, yesterday, Intel. So I send the alert early morning, right at the market open, to my end of day service that be ready for Intel, because it just popped up, and then 15 minutes passed, boom, I send the alert to buy Intel calls. So I stack all my probabilities in my favor. I implemented everything, like where is my exit, both sides, profit side and the loss side, and how many contracts I need to buy based on my portfolio, based on my situation, and I bought it, and that's it. Intel is done. But the reason I was interested in Intel is, if you are trading regularly in the market, you showing up, then you should be remembering that the Intel came to your radar somewhere before 2 3 days ago, or Intel kept coming in front of you. So when a certain stock kept coming in front of you, and it just keep coming, it's like somebody just keep showing up, and so then you say, hey, wait a minute, why this stock just pop up here and pop up there and is always in front of me? Why is showing up? So when the stock starts doing that, then I put him in a separate list, that stock, just because of the frequency of showing up. So when the frequency of showing up occurs 2 or 3 times more, I put it in a separate watch list, because I need to watch that. So Intel was one of them. It was coming up quite often for last 2 3 days. So and then after 15 minutes, then there's a 30-minute window. So and then there's an hourly window. So the stock market opens at 8:30 here at night. So at 9:31, I have another alarm set, goes off 9:31, and I say, okay, let me look at the some stock which are still moving after 1 hour. The stock which are still moving after 1 hour, there is a reason to pay attention, because all the news have come by now, and all the news have been digested. And if the stock is still moving, it's a good one. And I give you example today. Facebook was still moving today and yesterday. Momo, which I just bought some shares, I didn't buy options, was moving yesterday and today. Apple, I had position in Apple before, and today, even after 1 hour, I kept watching Apple. I said, okay, what Apple will do. So even after 1 hour, the Apple was moving at 189 plus, 189.10 something. So I added more Apple, just because I saw continuous movement from the early morning all the way, take one, one penny, one penny, one penny, just keep going, 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 and then it is still going after 1 hour. So I bought that. So this is the opening range breakout. So I hope you understand and you can implement. It's not that easy, it's not that difficult. All right. And then there are these 4 strategies. There's a more detail. I talked about these in another webinar last time, and then I talk more in detail in a coaching program. I'll tell you in a little bit right now. Gap up and gap down. So a lot of stock, they gap up and they gap down, right? So every day they almost all stock gap up and gap down. If the stock gaps up by 1 cent, it's called gap up, and if gaps down by 1 cent, it's gap down. But it's not a meaningful gap. For me, the gap is at least $1. So I put a gap setup for $1. So on those 300, 600 stocks. So if any stock gaps up, it shows up in front of me. Plus, I come to my office 1 hour before market opens. Sometimes I'm in the office 2 hours before, or 3 hours, because I'm in Thailand right now. So 3 hours mean it's 4:30 in the evening. So I'm doing things and I'm watching pre-market action. But wherever I am, if I'm in America, I watch market starting 1 hour before. So it's very important to watch pre-market action for your stocks, core stock. And I have prepared 2 lists. So on TradeStation, I have 2 watch lists. So on the one side, I'm looking at all those stocks which are gapping down, and on another side, I'm looking at all the stocks which are gapping up. So that's what I do: gap up and gap down. So I take all those stocks which look like will gap up and gap down, and I put them in a separate watch list. I call them like gap up, gap down. So now I have 2 different baskets. And then I put a filter, right? So I put a filter of $1 and a volume above average. So I put that, and now the stock gaps up. So if any stock out of those 10 stocks, because some stocks they don't, they are not, they look like they will gap up. There's no activity in the pre-market. There's no volume. There's somebody bought 100 shares at a ridiculous price. So that's the waste of time. The volume has to be good in pre-market. So and then the volume continues in the regular session. So when the stock gaps up with the volume and it gaps up to a certain dollar. So I click on that stock. So when I click on the stock, I see in my daily chart, I mean, it starts with the daily chart. So on a daily landscape, the weekly chart, daily, hourly, 15, 5, all this are being displayed, but I start with daily. So I look at the daily and I say, okay, where is stock gap up? I have pretty good idea in the beginning before even the market open if I'm interested in a stock where it will gap up on a daily chart because I can see the price. So when I see the price, I just look at it on the chart and I say, okay, when it gaps up, it will gap up here, and is there a resistance here or a support level? What would be the potential left if after it gaps up, what it will do? So when the stock gaps up, it needs to gap up above the some resistance level. It's better if the gap is at the beginning of the trend or middle of the trend, not at the end of the trend of a major trend. If the gap is above the major, like after a long major trend, then probably it's just a exhaustion gap. It won't move further, and it will pull back. So if it's at the beginning of a trend from consolidation, that's the best for me. So I add or I go for that stock, and it has to be above the resistance. If it's a lot of stock, they gap up and they just gap up right at the resistance magically. So if the resistance is 99, they just gap up 98.9. Magically, they just sit there and then they fall down. So that's not that's dangerous gap. So you can do gap up reversal. I don't do that, but the traders, professionals who fade the gap, they're always looking to fade the gap. Then there is a gap down. So a lot of stock gap down during pre-market, and then they gap down during regular session. So when they gap down, there's some bad news going on. That's why they gap down, like when gap down. So they gap down, and then they so look at your chart, 200-day moving average or 50-day moving average. Most of the time they are gapping down on those two averages, especially 200. Somehow magically they just gap down on the 200. It's like as if they're falling from the sky with on a big hand, and the big hand is 200-day moving average, and 200-day moving average support. So if you see that and then you see the powerful reversal, then you can go long. Otherwise, it takes time for the stock to reverse. So take a look at the win chart. It was doing that. It's gap down reversal. So these are the four strategies I also look for. And then there are others I pay attention, which are not listed here. All right. So I have if you want to talk to me about the coaching program, it's a 7 month now. It's not a 6 month coaching. We talk for 75 minutes. I will explain to you what coaching is about. So just send me email and we will talk further. There is a cost to attend this session and it's refundable. So if you join the trading session coaching program, that this what you pay here will be refunded to you. This session takes 75-minute talk, so I cannot talk for free. All right. So I show you some charts, and then we will go over the topic of trading, your belief in your trading system and the market condition. So I'm showing you just Apple chart. So you see, Apple was consolidating. I think this chart is a little older. In I prepared at 10:20 a.m. and it moved. So Apple was consolidating at the top. So it can do anything. We didn't know. It can break down, but usually when the stock is consolidating on the top, the move you have to when you if you're stacking your odds in trading is all about stacking your odds in your favor, right? Probability. What is the probability of the stock going up or going down? So when the stock is consolidating at the top, the chances are that it will break to the upside. So provided the market remains bullish and there's no bad news, otherwise it can easily crash too. So but the probability is to the upside. So Nasdaq is very strong. Apple belongs to Nasdaq, and today Apple just broke. It's breaking this resistance line. So Apple is going up. So Apple is very good today. This chart is prepared at 10:20 a.m. 10:20 a.m. Yeah. So later chart is show you more move in Apple. Okay. This is APC chart I prepared on 30th May. So 2-3 days ago, all the oil stocks were moving. So this is another technique I use. So for commodity or any in industry group sector, when one or more 2-3 stocks are moving up or down and they all belong to the same industry group, then it means something is happening, especially commodity like crude. So all the crude, a lot of crude stocks which fill my criteria, they were moving at the same time, like APC, Chevron, Exxon, um and there were others, ConocoPhillips. So all these crude stocks are moving. So I chose Exxon, and we made money. So when you see a candle like this, it's called Maru Bozu candle, or bullish belt hold. So when you see a candle like this, it's a bullish sign. So what is happening here? You see, this is a tiny hammer. So this is one clue that the stock is telling you that it wants to go up. Then the next is inverted hammer. This is another one clue that the stock is bullish. Then the third day, the stock start open, and the open and low is the same. So when the open and low is the same, it means from the get-go, not even a penny, the stock went down. So buyers were in a hurry to buy, and they just kept buying. They filled the gap. So when you see this is occurring during the day, you need to go long. So you just go long. I didn't go long because I already bought Exxon. So, but I prepared the chart, and yeah. Now another one is this. This one is Baidu. So Baidu fell from the resistance, but then it just stopped at 200-day moving average. So majority of the time, the stock just falls to 200-day moving average, as it magically is some support. But 200-day moving average is just a number. It could be 201 or 202. So some traders may have tweaked their moving average to something. Instead of 200, they may have a 210 moving average. Who knows what? So if they had 210, maybe it's coinciding right here. But I just use default 200. I get the idea. I know that, okay, this stock wants to move up. So it's kept on consolidating, and now Baidu is moving up. You see, Baidu wants to go up. Baidu wants to go up. All right. Now this one is a CME chart. So when you see the chart like this, where it's bumping its head on the resistance and trying to break, so at this, when it's trying to break and have a rounded pattern, it can easily break to the downside. So you cannot take this trade till it shows this breakout. So anytime, the point is, when the stock breaks the resistance with a big white candle like this, what it's showing, that's telling you that I want to go up. It's a new trend. So when the new trend is, whenever you see all these tiny candles bumping at the top, you will waste time if you buy, because you don't know. You could have easily bought it here and it's all waste of time. But then sudden break to the upside. This is a brand new it's a leg. So the candle has to be this kind, the strong candle breaking the resistance for is clearly telling you the resistance has been broken and is going up. CME is going up. Now, yeah, so COP. This is another chart of ConocoPhillips. I showed you, I think I showed you APC. This is COP. So I captured this chart. So it was nicely moving up, 50-day moving average, and at the same time Exxon was moving, so I chose that one. So when two or three or four or five commodity stocks are coming at your in front of you, and the crude is also moving positively, then you need to decide which one to take. One of those crude stocks. You just take that crude stock. It happened like every once a week or twice a week, or um, twice a month. This phenomena happens. They come down, then they go up. So if I were you, I would prepare a separate basket just for crude stocks. I do have a basket of crude stocks. There are about 20 stocks, major ones, and I watch those major crude stocks. So this is a COP after gapping up from 50 days, it's just moving up slowly. It's moving up. Chevron. See, the Chevron is also doing the same pattern. So all the stocks are doing the same pattern. Is the Chevron, Conoco, APC is all they are all doing. They are all bouncing from 50-day moving average. So if you are going through, if you are like let's say at night time you're sitting and you are going through uh, charts to see okay which stock should I be looking at tomorrow. You're preparing your list. These stocks should be coming in your list. But the stocks sitting at 50-day moving average, and then next day when you see the action, you take action. Facebook. So Facebook, incredible. I've been telling for a long time Facebook will go to 200 moving average. Not 200 moving average, 200 target. I've been telling for a long, long time. And it all started here, this hammer. You see that hammer where the news came for the Facebook privacy issues, etc., and how the big boys came and bought the Facebook. That's it. That was the ultimate buy signal I've been mentioning. And if you bought Facebook and didn't exit, so you are in a very good shape. It's going to 200, so new high. So Facebook is breaking out. I did buy Facebook, but I got out early. I did not believe it will go. So because I trade options, so option entry is early. So I got out somewhere here, and it's now it's here. You see now you see how Facebook is. It just met this resistance. So if you see this line, this is a resistance, multiple top resistance. So many time it just um, bumped its head. So it was bumping its head. Now look at this, how it broke out further. So yesterday it went to 194. So when the stock is at 194, consider it 200. Just assume it. When the stock is at 194, 195, 200 is no problem. So that's your easy money. 4 5 points is easy money. Just assume, okay, it's going to 200. That's where it's going. Intel. So this is what I saw on Intel. So I've been watching, and it kept coming on my radar, and I said, oh, so I know I trade every day, and I see all the charts. So I say, okay, Intel is in my mind. And then early morning today, Intel was moving. So I said, okay, Intel is moving again. So what's going on? So there is a news. Somebody asked me on the Facebook. He posted this. I heard some company he named. Google is coming up with its own chip, and it will hurt Intel. And Intel is going up? What's the reason? I don't know the reason. All I know is going up. So maybe the news is not as bad. So Intel is going up. So when the bad news comes and the stock reacts, that's positively. That's a sure shot stock you need to buy. News is bad and the stock reacts positively. That's like your holy grail indicator. Buy that stock and sell the stock when the news is good and the stock is not reacting. Sell that stock. That's your holy grail formula. So pay attention to this. So Intel is going up and is breaking out. So I bought Intel early morning. This is JWN. So the retailers were moving. I think Macy or something, someone else came on with a good earning. So when a stock comes with a good earning, let's say Macy comes with a good earning, and it's already gapped up, suppose 4 5 points. So that's not the stock you want to buy. Now you need to pay a switch. So immediately you need to switch to your basket of all the retailers and say, okay, so Macy can, and this all this work you're doing in a pre-market. So that's why you have to show up early, 1 hour before market open. Uh, you know, so you come early and you see, hey, Macy is moving up. So what's going on? So you see earning came up positive. Then you say, okay, let me see all the other retailers, what they are doing. So you have the retailers list prepared already. Uh, you don't have to do any homework. You just look at that list and then the pre-market, and then you say, okay, this one is reacting. Also, this one is reacting. Then you just put select out of those. You select those stocks, and then when the market opens, if it's reacting positively, you go for it. So because all the stocks in that industry is moving positively, and especially if the stock you like, it is also coming for earning in a week down the road. So if a stock like Macy came up with a good earning today and it gapped up 5 points, and then there's another stock you found and it's coming up with the earning after 1 week and it's moving positively, that's the stock you need to buy, because expectation run, so earning expectation run, and that stock will also run up. So that here is your chance to play, make some money before the earning. Just don't hold, just because a Macy came up with the earning and it went 5 points up, it doesn't mean Nordstrom will also gap up 5 points. You're just playing the expectation run. So you set your target and you get out before the earning. Too many times I receive email, traders who have a very great profit. Let's say they bought it 1 week ago and have a great profit, and earning is after market close. And then they send email, are we holding through the earnings? Should we hold? So no, you shouldn't hold. You shouldn't give up that great profit you have by holding it for 1 week. Uh, so at that time, you have to think, would you have bought, consider it as if you don't have that stock and it's a brand new trade. Would you initiate a brand new trade 5 minutes before market close? If the answer come yes, then buy something else, some strike, further out of the money strike. Don't just keep holding your position which you initiated 1 week ago and you had a great profit. Close that position, and don't even, if you are very convinced, then buy out of the money one strike, just to play from the house money. Otherwise, don't do that. Just close it. And what will happen is, this kind of situation hurt you more. Let's say the earning comes back and the stock tanks and you see all your profit gone, is demoralizing. So you are depressed whole day, and it affects your judgment, all your other trades. You're not taking any new trades. You're letting all the other trades slide by. It's a mess. So you don't want to create a mess for yourself. Just take the profit and find something else. There's always something else going on. So this is what happened to JWN. You see, it continues. So it triggered here and it kept on going and closed at 50. So we closed it. We took our profit and closed the trade. Here is Michael Kors. So now I'm watching Michael Kors. So this is another retailer, right? That they make bags and sell for $5,000, ridiculous price, and ladies buy it. So look at this. Pay attention to this. What I'm trying to explain. So let's say that this was earning and it fell. So it fell to 200-day moving average. Now look at the left. So when you look at the first, it fell to 200-day moving average. So that's your exit. So one member sent me alert on this level. He said, I'm buying puts. So he bought puts and he exited a 200-day moving average. I did not buy puts. He bought and he exited. So this is a good exit. 200-day moving average. If you are short, you need to exit at 200-day moving average. So he exited, and look at the volume climax. There's a big volume is falling. So when the stock is falling with a big volume, it may fall another day or so, and that's it. It's done. So all the sellers are gone. But look at the left. On the left, this hammer, is telling you that there is a support. So if you draw the line here, the support is at 56, but there is a support above the support, right? So the support is here. It doesn't mean the hammer low is at 56, so that's ultimate low 56. The support is this zone. Support is this zone. Somebody bought it right at 56, somebody bought here, somebody bought here. So all this is a support zone. That's why the hammer was formed. Otherwise hammer cannot form. And this hammer was formed because of the big boys, not guys like me and you who buy 100 shares. We cannot produce this hammer. Only the big boys can produce this hammer. So there's a hammer here, so there's a support here. And then here is a 200-day moving average, so support. So today I was watching course and I had other positions, so I did not do anything, but it came on my radar for long. So now it is on my radar for long. So if it pops up again and then it pops up again and it keeps popping up, like it's going here on the sideways, then it's going on sideways, suppose for 2 3 days, and then one day I see the third day or fourth day, like Wednesday, suppose I see a move coming up, then I am ready for it. I'll buy, I go long because it just keep popping up. So I just keep it on my radar and I just watch it, look at it, and see what it's doing. It could easily on Monday it could just easily go up. So if it starts going up, I miss it. But if it goes on the sideway, move or test again, and then starts moving up, I go long. But there is no short here. This one KSS. So this KSS was do again KSS. When I saw this KSS chart, I went long. You see this hammer, and then this candle is, this one is telling me is one to go up, and then further candles is bullish, and see what happened. Went up. All right. So this was an indication the buyers are in. Another one, micro monster. So we traded monster. Again, monster, we went along somewhere here. We had to wait spend some time on it, but finally it moved. And so the stock can go straight to your target, like in a day or so, or it can take time. But once you have to know that, okay, what is the direction of the stock? What is telling you? So is it is it up direction chances or the towards the downside? So once you determine the direction, then the timing. Sometimes you enter and then you wait. So it happens often. You wait, and then sometimes the trade becomes a day trade. So there's this big gap is going for a fill, uh, MNST. So here is a 53. So MNST is to the upside, going to upside. MRK. So when I saw MRK, this is what I saw. When I drew the trend line and I said, okay, this is the hammer and is bouncing against this trend line. So I said, okay, what are the my probability of MRK going up or going down? So this is every time when a trade is comes, I ask this question: what is the probability? The probability is that it wants to go up because of this hammer and it's just bumping its head to the support line. And this is what happened to MRK. I sold yesterday and locked my gains. MRK. See? Now MU. So we trade MU quite often, and we got out. I got out early, somewhere here. So MU, I got out early. I think we entered somewhere here and got out here, but then it just kept going. So you never know when the stock just kept going. It's hard, especially if you have option. Uh, if you have stocks, you can hold, but if you have options, then it's hard, because if you miss the profit, then and a stock tanks for news, then it doesn't come up, and then you lose your whole premium because of the time decay. So option is very is short term. So now MU bumped its head on the resistance and then fell, gap down. So looks like MU will come to fill the gap at this level 55, 56. So MU is a short, its support is here 55, 56. So MU is not along right now. So keep an eye on it to fill this gap. Yesterday it came and almost came and broke the low of the day before, and then it bounced back up and it's just sitting here. But it can come down to 55, 56. This is NSC. So NSC came to my radar because there were other stocks in this category which they were moving up. So I said, okay, let me pay attention to NSC. It's looking good. It looks like it's consolidating on top and it will break to the upside. So I went long on NSC, and this is what's happening right now on NSC. So I need a breakout above 155. So if it breaks 155, another 4 or 5 points, and I will be out. So NSC is something you can keep on radar. It's consolidating at the top. Nvidia. So Nvidia, we trade Nvidia and make money. My target is 275, and I did send you email, and I sent quite update on Nvidia. So Nvidia is doing this. So this is the 16th May. So it fell, and then this is the first time after it fell, it showed that it may want to reverse its direction. And then since then, it's just moving up. You see, moving up. Every day there is something going on to the upside, moving up, moving up. So 258 and 260 is the resistance. Once it breaks, it's brand new leg towards 275. Another 14, 15 points is coming towards Nvidia. It needs to break 260, 258, 260. This high. If it breaks, it's going higher. So from here all the way, it just keeps going up. Shack came to my radar. I just prepared the chart just to watch and see what it's doing. I don't trade Shake Shack, but it on 30 May, 2 days ago, it came and I saw it. I said, oh, it's breaking the resistance. So let me put it on radar. So I put it on radar. So it's doing nothing right now. Cena. So Cena is wasting my time. I'm long on Cena and it's wasting my time right now, but it's to the upside. So this chart I prepared on 14th of May. So right now it's doing consolidation on 14th May on the side. But see how many times it's just bumping its head and not breaking. When you see this long wick on the top, these are all resistance and these are all support. So my bias is that it's going to the upside because of this fall and forming the low. It fell big and it formed the low, and after that it just trading on the sideways. The down move is over. The up move is coming, but it's taking time, so it's wasting time, and the move will come. It's just a matter of time. So it's trying to break. So 92, 93 break, and then here to the upside. This one is SPG. We traded, and I simply traded because it gapped up. It fell to 50-day moving average, and then it gapped up. So I said, okay, it gapped up from 50-day. I can go long. I base my trade just simply on this gap up 50-day moving average, and it went up, and we made very good money. It went to 161. So I sold half in the middle and sold another half at 161. So this is 161, 162. This was the target. Square is going up every other day. Square is going up. So this is a first time I spotted Square. I said, okay, so Square is just in the uptrend, is bouncing off support. So I don't exactly remember if I bought on this day or next day, but I did buy Square and send the alert. And since then, it has been going up because of this support. So I always stack my probability in my favor. That's all I do. I say, okay, what the candles are telling me, what's this probability, and I go long. And this is what's doing. Square is breaking out. I sold my position yesterday on Square at 59.30. So it's breaking out. But for options, it has been a long 3-4 days of move, so I don't want to hold my option. So this is where I sold 59.30 yesterday at market open. So sometimes the reason you sell is because you see another trade building up and you need the money to put it in the brand new trade rather than on a trade which is going up for 5, 6, 7 days. If one big move down and then all your option profit is gone. So for option profit, to keep option profit, you have to be nimble and take the profit. Target. So this simple target came on my radar at this day. So at this day, the target came on my radar. So I was watching target and I said, okay, target looks like wants to go up. So this is an inverted hammer. This is a hammer double combination, and said, okay, I want to go long with the target. So when I saw this move, I said, okay, my target for target is this gap fill towards 75, 76. So I'm holding target and I will sell at this level, 75, 76 level. So this is a wind chart. You see how it fell to 50-day moving average, it gapped down, 50-day moving average, and then it bounced back up. So wind is long. This is what happened on a gap down reversal. So gap down on a news about some sales in Macau, and then it bounced back up. So it was down 8 point plus, something like that at open. And it gapped, like magically, it gapped down to 50-day moving average and bouncing up. So if tomorrow or Monday, if it starts moving up, that's your confirmation to go long. So go long on when it's gonna go. And when the stock does like this, it makes a new high. It just keeps going. It just keeps going. So if the stock move on Monday, it will just keep going. X. So there was a news, a tariff news, etc. Was coming up. So I was watching X. So all this you need to pay attention to the news also. So I would talk about this topic, but I explained there are three kinds of analysis. Fundamental analysis, you all know, and then there is a technical analysis, you all know. Then there is a rational analysis, where you combine your knowledge of fundamentals and fundamentally what the stock can do, and then put your technicals, and then you combine it, and then that's called a rational analysis. So that's the best way of trading. Put your fundamental analysis and technical, and then decide the trade, look for the trade. So that's called rational analysis. So all traders should be rational traders. So the X was expected to move because of tariff, etc. So I was watching and I went long on X and made money. You see X, what is X doing? It broke out. So the exit came when the news came. So sell the news. So we exited on X at this big move. So on the gap pre-market, the X was gapping up 4.5%. So since we had a position on X, we got in here. This gap up move on pre-market sold the positions of the as soon as the market opened. They sold it at 38, 39, they sold. So now X will go up, but for option trading, it needs to come down to 35 and then bounce back up. So it did, it's still in the uptrend, but it sold here. Oh, so this is the XOM chart. Remember I was talking to you about ConocoPhillips, etc. on 30th May. So all on 30th May, the stocks, all the charts of commodity, crude, they were showing the same pattern, 50-day bounce, right? So if so, when 4 or 5 stocks in the same category are showing up in front of you, then uh, I will answer your questions later. I'm doing my slide thing, so I'll read your question. So Exxon. So this is what I said. Okay, out of all those stocks, I have to choose one. I cannot buy more than 2 stocks in the same category because if they tank, all of them will tank, and I will lose all my money. So I just restrict myself to 2 stocks in the category. Ideally, you should have one, but 2 is okay. So sometimes you just say, oh, I want to buy this. Oh, I want to buy this candy also. So it's like that. So I chose Exxon, and then we sold at 82 when it hit this resistance. I sold yesterday. Okay, so this is again 50-day moving average bouncing up. So this is where I sold. So the reason I sold that, after the big candle, then it went sideways and then it gapped up and it formed this candle. This candle is telling the buyers and sellers. It doesn't mean that stock will not go up. It can go up, but there was not much enough strength. So I said, okay, I'll take the profit instead of risking it. Crude can go down tomorrow, and then all the crude stocks are falling. Then I'm just holding it, so I take the profit. YY keeps going up. We trade YY and it's a volatile stock. So this is the chart I prepared on 16th of May. I don't remember I traded or not. So it's just sitting on 200-day moving average and 50-day. So when the stocks are sitting in between 50-day and 200-day moving average, that's also your clue that it wants to go up. It's just sitting in a very tight support zone. So pay attention to that stock, what it's doing. If it's breaking up, you go long. So 200-day moving average looks like a hand, right? The support, boom, touch, close up, touch, close up, and then that's it. Boom, break up. So if you're watching it and you catch it, all right. So the stock charts are over. I show you some markets charts, and then I'll talk about the trading system. Okay, so this is the Hindu chart I prepared on 29th of May. So it's just sitting on 50-day moving average. So it's just doing nothing. It's just an average, right? 50-day moving average. Then I show you what's happening. So it's bouncing up from 50-day. Then it came down, tested 50-day. Then it bounced back up. So what is 50-day moving average is the support. So 24,380 is the support for Dow Jones, and is right now is sitting. Here's your resistance. The resistance is tough. 25,000 is your big resistance. Dow Jones 25,000 is a big resistance. Any number ending with zero is it becomes a resistance or support, especially when the number is 25,000 or 50,000. That's big resistance. So from the downside, and it's a big support from the upside. So 25,000 for Dow Jones is the resistance. This is SPX chart. It's doing the same thing. 50-day moving average bouncing up, bouncing up. It hit the resistance 27.22. So this 27.22, 27.40, 27.50 is the resistance for S&P. And today, it tried to break this resistance. So now what it does next is the key. So it's trying to break the resistance. But you should know, you should take help with other markets. So when you are looking at a chart of S&P or Dow Jones, then you also look at other indices. What other indices doing? For instance, in NASDAQ, what the NASDAQ is doing. Since NASDAQ is a leading indicator, it is for a while. So the chances are that these will break to the upside because of NASDAQ. So NASDAQ, when the NASDAQ is overbought, all the stocks are bought and they've gone up crazy. They will turn to the stocks which are in S&P, and then S&P will go up. So this is the NASDAQ chart of 31st May. So it's just bouncing up and down, you see, with the support, and it broke out. So NASDAQ 100, my target is 7,500 and it's going there. NASDAQ 100 is going to 7,500. So it's on its way to 7,500. So it broke out. So this one is the leading indicator, NASDAQ. So pay attention to the NASDAQ and NASDAQ stocks. This is the one. Russell, you see Russell. So sometimes Russell is the small cap is the leading indicator. So pay attention to Russell. You see on 30th of May, it broke out, right? Clear broke out, but then it pulled back, and then on June 1st, it bounced back up. So this is a bullish signal and when you see a bearish candle and then a bullish candle at the next day, same size, is a bullish indicator. So this is a bullish sign. So Russell and Nasdaq, they are telling you they broke out and they're going up. All right. So now these are our recent winners. I just my assistant put it. Once again, the swing option service offers 287 if you're a new member instead of 337, and you will receive email tomorrow. Now the last presentation I tell you about trading system. So it's a separate uh, what is it? It's a separate presentation. So let me open that presentation and explain to you what I mean. Okay, so you see the screen. All right. So what is the question? Well done, Noshi. Your inspiration. What tool do you use to monitor these stocks? Ravindra has left. I use TradeStation. Is it on purpose that you show one slide, money making strategy? Yeah, it is on purpose. Money making strategy, one slide. Um, I can talk whole day. So this is just a webinar. So I'm just telling you in broad category, one slide, and then you can go deep. Into a lot of things. So I have a course, 8-month course. So I go deep into that. So this is just a webinar, right? I'm teaching, but it's a webinar. All right. So this is a new topic. I think the new traders need to understand, and it is important. So I'll explain this matrix. It has 3 slides. So this presentation has 3 slides, and I will explain the combination of x-axis and y-axis and what these 9 quadrants are. So so let's go. So do you see on the x-axis it says belief in trading system? That's your belief in your own trading system or someone else trading system. So let's say you're trading someone else's system. Let's say you are my subscriber and you're trading my trading system, or you have developed your own trading system. So, and this is the market conditions. So there are many other metrics I'm developing, and I will teach you later. So this is just one metric. So this is your belief in trading system, low, medium, high, and this is the market conditions. So there are many types of market conditions. The market conditions sometimes are favorable. They make you a lot of money quickly. Everybody is making money. Everybody is a champion. So that's a favorable market condition. And then market conditions become difficult, and then market conditions become very challenging. So the market goes through these phases, favorable, difficult, then you say, oh my God, market is very challenging. Even gurus in CNBC are admitting it. So, so these are the market conditions, and then the belief in trading system. So your belief is either low, medium, or high. So, what happened? You go through the phases of your belief. When you develop your new system, your belief is low. Or if you're following someone for trading, because you don't know him, so your belief is very low because you just don't know him, how he performs or how he does. Or you are developing your own system and you don't know how it will turn out. So your belief is low in the beginning. The objective is to take your belief in your trading system to very high level. So it comes with the constant effort. You keep learning, keep optimizing it, fine tuning it, implementing it, monitoring it, writing down all the results, see where you went wrong, and then coming back and fixing it, what works, what doesn't work, till you see the result on a consistent basis. So when you see the result on consistent basis, then your belief and the period has passed. You have seen it all, not the good time, but also the bad time. So you have gone through one cycle, which takes 1 to 2 years because the market conditions, they don't change overnight. So you have to see the bad year. So those who come in a bullish period and they make money, they haven't seen anything. So they're just happy. And when the bad time comes, they are unable to handle the bad situation. So if they start at the bad situation when the market is bad and they develop their system and then they move to the time period when the market condition is good, then they are more solid. So the point is you have to go through all times of the market, all conditions of the market. So let's say your belief in trading system is very high. So you become an expert. The results are very good. So if you believe in your trading system is very high, and the market conditions is favorable, you should be feeling relaxed. These are your emotional states or your actions, what you do. So if you relax and things are working nicely, it's because your belief in trading system is high. You know that you have perfected your trading system. So this is the conditions you go through. You're relaxed. Now, when the market becomes difficult and you have a high belief in your trading system, your confidence in yourself, you trust yourself, then you feel confident. Then you say, okay, I understand the market condition is difficult, but I believe highly of my trading system, and you act confidently. So this is the next step. And when the market is challenging and you have a high belief, then you remain patient. So you know, okay, this drawdown period or the red you see is a temporary and it will be over and soon you will see the good things. So you take action, you cut down your trading per trade overall in the market. You are cautious and you're patient, but you believe in your trading system. It's high. So in other words, when your belief is high, you remain in one of these three mode of trading. So you should be either relaxed, confident, or patient. So that's the mode you should have all the time during the day when you're trading. Whereas if your belief on the other side, if your belief in your trading system is low, so for instance, you just develop your own trading system or you just joined a newsletter, somebody's newsletter. So you don't know how he trades, what he does, how he's finding his trades, how he's determining his stops and exit, things like that. You just join, so don't know anything about that guy. So your belief is low. So when your belief is low, and let's say he sends one trade and it makes you big money, you become overconfident. Even though your belief is low, you're overconfident. You say, "Oh, it, the thing is favorable to you." So you become overconfident, and then what happens? This overconfidence can kill you because the first trade you put, although you don't have you have a low belief and it made you money, the next trade you execute, you put more money than you are supposed to, and then you put more money, and then comes the loser trade, and the loser trade takes more money from you than the money you made from the winning trade. So that's where you people go wrong. This is at this stage people go wrong. They do have low belief in trading system, but they when they start making money, they get overconfidence. And then when the market gets difficult, then they just start ignoring the signals. The market is saying exit, they don't exit. If the market is telling them to stop trading, they don't stop trading. They just ignore signals. They become they self-destroy. So self-destruction mode sets in. When the market is difficult, they just destroy themselves, because they have low belief in trading system. They don't know what to do. So this is the worst condition to be in when you have a low belief in trading system. And then when the market really will become challenging, then they abandon the system. So they abandon their system or they quit the newsletter where they signed up. So that's where people leave, and they because they don't know what's going on. They have low belief in that person or themselves on their trading system. So the middle part is the medium. So medium, when they go through some stage of developing the system and they have a medium trading system, this comes usually after working hard for a few months or a year. They believe in their trading system. They have some sort of belief. Then when the market condition is favorable, they still remain tense. So they are tense. They say, okay, I'm not sure whether it will work or not. Looks like it's working. Things like that. These are the ideas which come in their mind. And then when the market becomes difficult, they suddenly become skeptical. So they change, their mood change. They start doubting immediately because they have a low belief in the medium belief in their trading system. And when the market becomes challenging, they start modifying their system. Although you can modify your trading system slightly. There's a difference between fine tuning or optimizing your system or completely modifying the system. So modifying the system is just bringing in new indicator, new studies, buying a new software or adding a new software, mm, instead of trading the trend, start trading anti-trend, things like that. So they just changing their strategies. They start doing all this kind of work, modify the system when the market becomes challenging, because they think sometimes they don't even know that the market is challenging. They just know they have a medium belief. So they don't understand the market is challenging. The market is not producing the result which they want to. So they don't understand it's the market. Their system is correct. Shouldn't be doing anything, just little optimization. But because they don't understand the market, they start modifying the system. But those who understand the market conditions and they have high belief, they stay um, in one of these mode. So it is very important for all of us to have a strong belief in our trading system, whatever we are doing in ourselves. And on the other hand, we need to understand what is the market conditions. So market condition favorable, difficult, challenging, the market goes through this cycle, and we need to be in one of these mode. So if we are not in one of these mode, it means we have a problem. The problem could be we don't understand the market conditions, or we don't have a proper belief what we are supposed to have. All right. So that ends my presentation webinar for today. And the next webinar will be 2 weeks from now, because next weekend I'm traveling. I'm going back to San Diego. So I'll be in Bangkok and then I'll be traveling. So if you have any questions, please send me email. Otherwise, I'll see you after 2 weeks. And I will see you others on Monday for coaching. Thank you for coming. I'll prepare new topics for all of you. So please do show up after 2 weeks. Okay. Thank you. Bye.